Well, folks, back to Europe. The European Central Bank has decided to cut interest rates by 0.25 percentage points, bringing them down to 2.25% per year. That's right, 2.25% annually. The goal? Of course, with lower interest rates, they aim to stimulate the European economy, which is already starting to feel the impact of trade tensions and the rising American tariffs. And it's not just Europe seeking to lower rates to deal with the consequences of Trump's tariff policies. In fact, Trump himself, largely responsible for the current situation, is pressuring the Federal Reserve, the U.S. Central Bank, to cut interest rates too. However, he's facing resistance, particularly from the head of the Fed, Jeremy Powell, who has already warned that Trump's policies could cause both inflation and slower economic growth. Trump has even started threatening Powell, saying he could be fired. But according to American law, the president does not have the authority to fire the Federal Reserve chairman. Still, in his speech, Trump suggested Powell's days are numbered. Well, my friends, since we're talking about the economy, growth, and inflation, let me share some good news from Africa. Let's talk about Senegal. It seems the country is experiencing a somewhat inspiring moment, especially in its secondary sector, the industrial sector. Senegal's industrial production has been growing significantly. Its GDP grew by 6.9% in 2024, and it wasn't just a one-time event.